Hey everyone, it is Evan here from the Trade Risk on Tuesday, January 14th, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and that is it in this one shortened video. No sectors in this. So let's jump into the dashboard here. You can see markets finishing mixed here on the session. IWM out in front leading, and on the day, NASDAQ underperforming, which is basically the exact inverse that we've seen over the past, call it 2 weeks or so. When we look here at the 5-day change numbers, all the major indices in strongly positive territory. NASDAQ 100 still the dominant performer over the past week of trading. If we scroll down and take a look at sector performance here, you can see technology makes sense with the NASDAQ up there, out in front leading, followed by Dow Transports and staples up there as well. And on the downside, we only have one sector negative over the past 5 days. That's energy. Then we have discretionary and industrials at the bottom of the list, but positive. In terms of major markets, we got emerging markets, which we haven't seen at the top of the list in some time now. Really getting some nice rotation and performance here, up almost 3% over the past 5 days, followed by China and the S&P. On the downside, volatility, oil, and silver, all in firmly negative territory. So let's jump into the charts here with the S&P 500. This is a weekly time frame chart, and this is the cash market, cash settled market for the S&P 500. We officially sort of kicked off earnings season. A lot of financials starting off as usual. Markets starting this week off positive. So we are continuing in this uptrend here that we've been in for quite some time now. We can see that last Friday, or in our last market recap video, we talked about the attempt now to rotate higher, the attempt to break out in the indices, given last week's bullish engulfing weekly bar here, and we are at least initially getting some follow through. It is only Tuesday here looking at these charts, so of course a lot can change into Friday, but this at least gives us some structure and some context in the bigger picture that this uptrend does continue to be intact. Bulls are trying to get follow through to last week's breakout, and so far so good as earnings season kicks off. Now, one of the things we talked about in last week's video as well was the IWM and the Russell 2000, which was not really participating. It really wasn't having the rally last week. You could see it was still just consolidating here. It wasn't doing a whole lot wrong. We talked about the overall structure of the Russell 2000. But you can see that it was very much kind of sitting down here, consolidating while the S&P was attempting its breakout, while the NASDAQ 100 was helping lead. And this week we've seen a little bit of a flip here because we did get some good rotation yesterday and Tuesday, both bullish days for the Russell 2000. And you can see so far it's up 1% so far on the week. And when we look here at the weekly time frame of the Russell 2000, you can see now that perhaps this 3-week pullback that we just went through, which is a very shallow pullback, but perhaps that has run its course. And if we can start closing, in fact, even if we closed where we are right now, it would be the highest weekly close we've seen in about a year. If we can get over 167 or so, if we can start clearing through some of this recent range here, particularly on that weekly basis, then things are quickly going to look pretty strong here for the Russell 2000, which would be a great driver for continued performance in this market, just broadly speaking. We can see the momentum here at the top of the chart. MACD is still pushing higher here as well. So there is, there are things to like now with this Russell 2000. We should pay attention to this early start to this week. And again, if we can get through these highs here, I'd want to focus some attention there for performance catch up. The NASDAQ 100 has been our leader here for this past month or so. I mean, arguably even longer than that, but I think really showing its character this past month or so. And we talked about this channel that it's been rising in here in last week's video. You can see it's kind of bumping up against the top pin here, and maybe a little bit of a cool off, maybe some rotation or just a little bit of a stutter step sideways consolidation through time, while maybe we get some rotation into small caps would be a very healthy thing for this market. That's certainly the most bullish, sort of optimistic scenario that we could see going forward, to keep the money in equities, but sort of rotate it amongst some other individual sectors and stocks. So we'll see if that takes place. So far, though, Qs continue to be in this uptrend, and that channel is still kind of firmly holding on to the relevant slope of that trend. If we go to the S&P 500 just one last time before we move on, you can see here with the horizontal levels drawn, 3260, that's what I'd be paying attention to here still in terms of nearby support, upper level sort of momentum support, if you will, for you active traders. That's what I'd be paying attention to. If we abruptly started to lose that level, that would be cause for concern in the short term, and that's what I'd be paying attention to. Overhead, there's no overhead supply, no levels to deal with. We're trading basically at all-time highs. So that's the rundown on the market. Earnings season kicking off. Market likes it so far. Bulls continuing to see some rotation, small caps helping lead or rotate into that charge. Now, if we get to some other major markets, we'll see TLT here, which did have a high volume session today. It is up only marginally here on the week. You can see the good volume that came in here today, and you can see the constructive looking kind of sharp retest here. It did retrace a little bit deeper for that higher low, but it did springboard nicely here. And for TLT, we zoom out, it's still very much in a sideways range over the intermediate term, or even long term if you consider 5 months long term. Then so because of that, we do need to get some more convincing action here. We need to get more follow through to the upside that this can actually start to break out. And a good start for that would be back over 140. If we can take out last week's highs, if we can start getting over 140 and leaving a lot of this prior supply behind us, then this looks a lot better, a lot quicker. But until and if that happens, I do think there's interesting, potential short-term signals you could be, legging into if that's your style, or taking some shots or partial size. But for the bigger breakout here, we're going to need over 140 and then really, kind of over 142 or so to start breaking this longer term consolidation that we've been in since August of 2019. If we go to gold next here, we take a look at metals. You can see pulling back so far this week. Did have a nice move, sharp move up into really the past 3 weeks or so, 3.5 weeks, ever since the end of December. It is now pulling back here. It's retracing some of that sharp move here. So for you pullback traders, for you traders that are looking for that entry, if you missed the initial breakout here on gold, here's your chance now to take a look at a pullback here as it comes back down into the 145 area. Also did make a little bit of a stand today. It still closed negative, but it certainly closed off of the lows here. So GLD, pay attention to it. Got a nice uptrend going there. Had a lot of momentum in the recent weeks. So it'd be something I would want to pay attention to. In silver, kind of the same thing. A little bit weaker though. Didn't have such a sharp move like gold did, and it still didn't really break away from prior supply in here. So silver a little more, a little more situational, a little more left to be desired here versus gold, but still, given the move, the sharp move it did have 3 weeks ago, it is pulling back here, so it is something still worth watching. It is still in the short term in this uptrend, so we'll see if this can continue here as well. Last but not least, we'll go to oil and energy. Oil had one of the biggest down weeks it's had in quite some time last week. So far this week, it is down here. It is a little bit off of the lows, but it's still off about 1%. We talked about this trend line here last week about potentially kind of coming into this lower $12 area, which is where this trend line meets, and then maybe some of this horizontal prior influence level here to look for a potential retest higher low to see and measure the bull appetite at this area. So far, it looks like it's trying to hold. Might be a little bit too early to tell, but we'll want to see how this closes out the week here as this comes back in to an important spot here for USO. Last but not least is natural gas. Natural gas putting in lackluster session here today. It opened up near the highs. It had an encouraging open, but it basically sold off all day. The opening print was the high of the day, and it sold off and closed at the lows of the session. So not really a desirable looking candle here if you're looking for this bounce to continue. It did break over this downtrend line that has been in place since November. It is holding above it still, but again, as a reminder, all of the longer term kind of context here is down and to the right. So you you are fighting the current here, so you want to be a little bit, you want to be active and nimble if you're taking shots here, and have some experience in this market to trade something counter trend like this. So that is it. That's the quick market recap there. Again, check your earnings dates because we do now have a lot of catalysts on deck, and I think that's it. So thanks as always for tuning in and watching. You can subscribe on our YouTube channel or follow us at The Trade Risk. Have a great rest of your day. We'll see you back here tomorrow for some swing trade ideas during the market session.